Good afternoon, traders. I hope everyone is out there in the markets today making money, getting happy, getting everything that you step into the markets for. My name is Don Hensley, and I'm hosting today's SpeedTrader webinar number 13. And we're going to be talking about something extremely important. But one of the things I wanted to bring to your attention, yesterday, I was in the city yesterday, and I had a trade show to go to. It was a traders conference. Great time, a lot of new and exciting things that SpeedTrader is going to be rolling out in the future, and I want you to check back with us on what those new and exciting things are. It was great to see Sean McLaughlin from Trade Ideas yesterday. Had a great talk with him, and he has his conference coming up on October 20th of this year. It's the Rise with the Machines conference. So for those of you that have not already registered out in sunny San Diego, California, I strongly suggest you do so. You know, our CEO, Craig Manderson, I have about a 7:30 a.m. call with him just about every day to kind of go over what it is we're doing, company strategy. And one of the things that he says to me more often than not, right before I get off the phone with him, he says, you know what, let's get out there and have a great day today. Let's give these guys our best today. And I think that that goes a long way. SpeedTrader, it's within our corporate culture. We're not able to give you advice. We can't tell you specifically what stocks to trade, but we can give you our best efforts. And my guest today is a certified public accountant. Let me back up. He's got many titles, all right? Certified public accountant, okay? He's also a member of the Florida National Guard and just has so many amazing things to offer today. I want to make sure that you guys understand that some of you may be overpaying on your taxes. It's our goal for today's webinar to bring up some topics that you should be asking yourselves to save some money. In the meantime, I want to introduce my guest, Brian Rivera, CPA. Brian, how are you, buddy?
Doing well. Thank you.
Oh, great, man. Good. Hey, listen, before we go any further, I know that you are are you a major yet in the Florida National Guard?
I did. I just got picked up for major. I'm actually in the Army Reserve.
Oh, the Reserve. Okay. Apologize.
Yeah, Reserve. Reserve's a little bit better than the Guard. but yeah, I just got picked up for major, so I should be pinning it on hopefully like the next 90 days.
Oh, congratulations. I was in myself. I never made that high of a rank. It must be pretty exciting.
Yeah, it's good. It's always an honor to be able to serve. So that's how I look at it.
Oh, that's fantastic. Well, now away from that, you are a certified public accountant. Tell me a bit about your practice. Tell me a bit about how you got started.
Yeah, so I am a CPA. I'm certified in the state of Georgia and the state of Florida. So I've been practicing for about 12 years now. So I started my career off working for a Big Four CPA firm by the name of PricewaterhouseCoopers. I started in the West Coast market in Los Angeles. Then I made my way to Atlanta, and then ultimately settling down in the Orlando, Florida area. So while I was working with PwC, I would do a lot of cool things. I had the ability to, audit a lot of Fortune 500 companies, and through that, that's actually how I got into the market. So I started, just trading mutual funds, things like that, just because of the independence rules that go with public accounting firms. So finally, when I left there, that's kind of how I got into day trading. And then I didn't want that skill set to go to waste. And so I tried to figure out a way to kind of merge trading with tax compliance.
Excellent. And now you specifically cater to traders.
Yeah, exactly. So I am the managing member at Trader Tax CPA. So we are a cloud-based CPA firm. So what that means is we're able to service clients across multiple states. So all of our technology is online based. So there's no brick and mortar. You don't need to go into an office. Everything you can upload to our secure client portal. And from there, we'll take all of your data and, prepare your returns. And
That's
so,
incredible.
yeah, so the cool thing about it, though, is like, a lot of CPAs, tax attorneys, tax preparers, they're not well versed when it comes to the complexities of day traders. And so that's where our specific niche is. We just focus on the active retail trader.
That's great. That's great. I wanted to have you on this series of podcasts. It's actually a pretty sad story, and I promise you it's the only sad story I'm going to tell you today, but here it goes. I have a friend of mine who she lives in Darien, Connecticut, which is a little south, or excuse me, a little northeast of the city. And she's a trader, and she does very, very well. And the year before last was a $250,000 year for her. And she's of that profit, the what she was trading with has already been built to where she needs to be. Of that $250,000 profit, she spent quite a bit of it and wound up having a substantial tax burden at the end of the year. And it's a very cautionary tale because she's been playing catch up plus paying as she goes now out of her profits now, and it's a really big squeeze. It's a huge squeeze. So I want to make sure that that people know that the government's not messing around. Am I wrong?
The government doesn't play. So anytime you have a tax liability in excess of 50 grand, you're now in federal tax lien territory. So when it comes to your house, your boat, your toys, they have access to anything. So anytime you owe the government money, that's just not something that I recommend you mess around with.
Okay. Okay. So let me ask you this: in your professional opinion, is the average trader paying too much in taxes?
It depends, right? So if you're not well versed in, kind of what the difference between the IRS classifying you as an investor versus a trader, then you could potentially, yes, be paying too much in taxes. There's deductions that you're missing. There's different write-offs that you could be writing that you could expense on your return just for being a trader. For example, if you trade within an entity, let's just say an S corporation, you can actually contribute up to, it's about 54 grand into an individual retirement account, which is a direct write-off against your trading profits. Or if you, let's just say you use SpeedTrader, right, and you like to short sell a lot of small cap stocks, and you pay a borrow fee to the locate provider just to borrow the shares for that specific day. Well, the cost of doing business in this skyrockets when you compound that day over day over day. So many traders that I meet, they're like, "Hey man, I didn't know I could write off my locate fees." I mean, that's huge. I know some guys, they're spending $7,000 to $10,000 a month just in short locates alone.
Wait, so you're telling me that if I'm a single member LLC, as a short seller, you can deduct your stock locate fees?
Exactly. So that's a business expense. So in 2017, you could actually run that through your Schedule A, and what that is you would deduct it as a miscellaneous itemized deduction. Well, in 2018, the tax code changed to where you no longer have that 2% miscellaneous itemized deduction. And so now it actually gives you more incentive to be classified as a trader, so that way you can write off things like locate fees and margin interest. And let's just say you're a part of educational service, like you're getting mentorship services, you're doing a lot of these other things. Well, all those stuff are business expenses that can be written off directly against what you take from the market.
That's incredible. That's incredible. So let me ask you this, and I'd actually like for you to start answering this question by defining mark to market for those listeners that do not know. But my question to you is, can I claim trader status but not elect mark to market?
Yes. So when you claim trader status, it affords you the ability to claim mark-to-market accounting. So it doesn't mean you have to. So if you are a trader and let's just say you pass the litmus test to be classified as a trader, then if you like, you can claim mark-to-market accounting. So not in every situation do I typically recommend traders to make that election, because let's just say, for example, you had a rough 2 or 3 years where you had a couple capital losses, right? So you're an investor, so those losses are compounding, and you know that if you have a capital loss, you can only offset ordinary income up to $3,000, and you have to carry the rest forward. So if you switch from investor status to trader status, you're going to lose that capital loss carryover. So if you're having a good year, I would say, hey, pump the brakes and let's wait until the next year so that we can soak up some of that capital loss using your trading profits. So
Now let
it's
me
not a
ask you
one
this.
size all fits. It's every trader is different. So I always recommend to, just reach out to us and book a consultation so we can talk about your specific situation.
That's incredible. Do me a favor, for those that may be new to the concept, can you define mark to market in like a Reader's Digest version? What do you mean by that?
So high level, mark-to-market accounting is it's an election that you can make, which essentially reclassifies your losses from capital to ordinary. So what that means is, like I just said, if you had a bad year, let's just say you lost 100 grand in the market. Well, if you were classified as an investor, you could only deduct that against capital gain income, or $3,000 can offset ordinary income. So if you don't have any capital gain income, guess what? You can only write off 3 grand against your ordinary income. Now, if you made the mark-to-market election and you had a bad year in the market, and let's just say you lost 100 grand, well, you could take that 100 grand directly against any other income that you made. Let's just say your spouse worked or you had a job. You could offset this your day trading losses against other forms of income.
Wow. Wow. Wow.
Huge.
Well, that is you. Well, let me ask you this. Let's say I'm carrying a large capital loss. Let's say I had a bunch of decisions that didn't go my way, right? Can I convert to trader status while I'm doing that, while I'm carrying a large capital loss?
It's depending on the facts and circumstances. So if if it's not a one like again, it's not a one size all solution. So it depends on a couple things. Like if you're going to achieve profitability, you know, it, it may or may not make sense. But if you're like, you know what, screw it, I don't care about my capital losses, and I know that going forward I'm going to be disciplined and I'm going to have a strategy and I'm going to do the right things, then maybe that makes the most sense. But I personally probably would wait until you prove to yourself that, hey, I can do this, and that way I can reap the benefit of the capital loss that I'm carrying, because it actually is a benefit. Because if you have a good year, let's say you made 100 grand, you can offset the 100 grand that you were carrying, and essentially your tax liability be zero in a good year.
So I know that you're going to cover this later, but I want people to cover it now. First of all, we are going to be posting this webinar to our website because there is just a ton of information inside of this webinar and inside of what it is that you're saying. That having been said, Brian, how do clients reach out to you should they have questions? What's the best way to contact you for a consult?
So I'm very active on Twitter, so you could shoot me a direct message at Trader Tax CPA. You can also go to our website, which is tradertaxcpa.com. And then you can also shoot me a direct email, and that's info@tradertaxcpa.com. So you got 3 ways to contact us. And if you have a pretty simple or basic question, we'll usually answer it pretty fast. But if it's a little more detailed, then we always recommend to reach out to us for a consultation.
That's great. That's great. And just one more thing that I thought was really, really cool about your company is, if somebody wants to take advantage of this and let's say start a single member LLC, you have in-house counsel that can walk them through that, right?
Correct. So we do have a entity solution service where we will help draft your bylaws, your articles of incorporation, any operating agreements, and then also if you want to make that S corporation election, we can take you from the beginning to the end. So our in-house legal counsel will handle a lot of the filing documentation, and then we'll just look at it from a tax perspective. And so once all that documentation has been taken care of, we'll give it to you, and the next step would just be, hey, I got to put my SpeedTrader accounts in my trading entity.
That's incredible. That's incredible. I understand that you have some content for today's webinar too. So what I'm going to do is I'm going to turn the screen over to you.
Okay, so like Don said, Brian Rivera, I'm the managing member at Trader Tax CPA. We are a cloud-based solution service, again, so you don't need to come into an office. Everything that we do is completely online. And I did want to thank SpeedTrader as well, Don and team, for having us on. It's always a joy for me to talk about trading. It's there's two things that absolutely get me pumped. One is trading, and that is because trading is one of those professions where it's almost like hunting. It's like you wake up every single day, you need to have a plan. It's kill or be killed, it's feast or famine, and everything has to flow. And if not, you're going to end up coming home with a negative paycheck. So I just respect the discipline aspect of being a trader. It's why I do it every single day. I'll do it at a minimum. I'll trade the open, and then I'll tend to other business things, but I'm always watching the market. Now, the second thing that gets me fired up is helping people save money on taxes. Now, a lot of times people get overwhelmed with the complex tax code, and it is my job as a CPA to make sure I interpret that information and make sure that we minimize your tax liability. So when I'm able to merge day trading with minimizing tax, it was a perfect marriage. And so it's just something that I completely enjoy doing. So the goal today is to not get you in the weeds. I'm not training the next CPA. I'm not training, tax professionals. Really what I'm doing is I'm trying to give you guys nuggets of wisdom so that way when it comes tax time, a light bulb will go off in your head. Just as a trader, you need a strategy every single day, to dominate the markets. Well, the same thing happens come tax time. You don't want to be caught with your pants down and like, oh my God, I owe all this money when you could have saved if you just took a couple different steps in navigating the tax law. So before I get into the details, I want to level set and talk about how the activity behind that computer screen is taxed. Then I'm going to talk about what the IRS says a trader is and what an investor is. A good friend of mine, he would always say, hey, just because you sleep in a garage, it doesn't make you a car. Well, I say the same thing to traders. Just because you're behind a computer and you're hitting a bunch of keys, that doesn't necessarily make you a trader for IRS purposes. So once we define, what a trader is and what an investor is, then I'll jump into what trader status is and what does that exactly mean to you. And then from there, I'm going to talk about, some of the top tax deductions that we're seeing as a firm across all of our clients, some of the commonalities that we're seeing. And then I did briefly touch on mark-to-market accounting earlier, but I will go over that again. And then after that, I'll talk about some of the key tax deadlines that to be on the lookout for, and then we'll open up for questions. All right, I'm going to start with the good stuff first. We're going to cover gains because everybody loves gains, right? So if a security is taxed as ordinary income, it is subject to your marginal tax rates. Your marginal tax rates are based on your filing status and income. So for a security to be taxed as an ordinary income, the trader will have had to hold it for less than 12 months. So everybody on this webinar, anybody that's viewing this, you're probably a day trader and you're holding stuff anywhere from 30 seconds to a week, depending on what type of trader you are. So everything that you're doing, you're in ordinary income tax territory. So what does that look like from a tax perspective? So I put together this table. And what this table does is it compares what the marginal tax rates were for 2017 and what they are effective for 2018. President Trump and that administration passed the Tax Cuts and Jobs Act, and it changed a lot of things. And so I just want to make sure that I incorporate a lot of those changes in this webinar because you may be used to things a certain way. Well, now everything's going to be brand new. So for example, if you made 100 grand trading and less all your exemptions, less all your deductions, let's just say you made 100 grand and you were single. In 2017, if you follow me on the left chart, your effective or your marginal tax rate would have been 28%. That's that 91 to 191. Now, if you're married and you're filing joint, your effective rate would have been 25%. Now, fast forward to 2018, let's take that same 100 grand. Your marginal tax rate is now 24%, while if you're married, it's 22%. So we are seeing across the board on average, traders saving between 2 to 3% with the new tax code. In addition, if you have anything, and I'll cover on the next slide, capital gains income, so that's anything that you hold longer than 12 months. The only real change you're going to feel is if you're making money like Don Hensley, where you're above that 400 grand mark, then your long-term capital gains rate is going to be essentially 20% effective 2017, and then 15% 2018. So, all right, so capital gains. If a security is treated as a capital gain, there's two different ways. So I just touched on ordinary income tax rates. And then secondly, if you hold it longer than a year, you're either going to be taxed at that 0, 15, or 20%. So losses, right? Nobody likes losses. But from a tax perspective, if you have the right planning and you have the right strategy, you can actually use these to your advantage. So if you have an ordinary loss, it offsets any other income you may have dollar for dollar. So for example, if you have a $10,000 ordinary loss, any other income you may have, let's just say you have a job, your wife works, etc., that will offset that income dollar for dollar. Now, ordinary losses are not subject to the $3,000 capital loss limit. And if you do not have any other income sources, ordinary losses can generally be carried back 2 years by filing amended returns, or they can be carried forward up to 20 years. Now you'll notice that I have a strike through the text, and that's because effective 2018, there are some changes to the net operating loss carry rules. And so historically, we could carry those things back 2 years. Now that's eliminated. However, we can carry those forward indefinitely. So it's not capped at 20 years. You can carry it forward for 100 years if you want. And so if you experience a capital loss, you can use it to offset other capital gains dollar for dollar. So it has to be capital income. So if your capital losses exceed your capital gains, again, you can take a capital loss deduction, and $3,000 can be offset against any ordinary income you have. So then you can repeat this carry forward process until everything is soaked up. So if you're carrying $100,000, you deduct $3 grand this year, you carry the $97,000 forward until it's completely soaked up. All right, so now that I've level set on the activity, now I want to get you in the mindset, okay, what is a trader and what is an investor? So a trader typically looks at things from a technical analysis standpoint. You know, they're staring at the minute by minute charts. You know, they're capitalizing on, you know, monetary movements in price at a point in time, while an investor, you know, they're looking at things long term. You know, they're trying to build an investment portfolio that, you know, will build wealth. So, all right, investor. So an investor typically buys and sells securities and expects income from dividends, interest, or capital appreciation. They buy and sell these securities and hold them for personal investment. They're not conducting a trade or business. Most investors will hold these securities for a substantial period of time. A lot of times traders, you know, they have a bad trade and it turns into an investment. So sales of these securities result in capital gains and losses that must be reported on Form 1040 Schedule D. And then every single trade needs to be documented on Form 8949, which is sales or other dispositions of capital assets. So as a tax compliance firm, one of the things that we're seeing is a lot of times when traders are self-preparing their returns, you know, a lot of times they'll report consolidated, when that may be appropriate if you only have one brokerage account. But if you have multiple brokerage accounts, let's just say you use SpeedTrader and you have, you know, another firm, well, theoretically, you actually need to look at all of your trades and calculate the wash sales across all brokerage accounts, not just, it's not on a brokerage by brokerage basis. And then again, like I said earlier, investors are subject to capital loss limitations, and they can no longer deduct any miscellaneous expense associated with their investment activity. So the extended filing deadline is October 16th. And so some of our clients were finalizing, you know, some of their paperwork just to meet that deadline. And this will be the last year that they can write off expenses through their Schedule A. So giving them more incentive to try and qualify as a trader. All right, so now on to the good stuff. Traders. So how we evaluate traders, it's not Brian's personal opinion. It's not our firm's personal opinion. It's all based on IRS tax topic 429, which is the authoritative guidance that classifies traders and securities. So I'm going to read what it says, and then I'm going to tell you essentially what our stance is as a firm. So you must seek to profit from daily market movements in the price of securities, not from dividends, interest, or capital appreciation. The activity must be substantial, and you must carry on the activity with continuity and regularity. So the IRS also further goes on to say that typical holding periods for the securities bought and sold, the frequency and dollar amount of the trades during the year, and the extent to which you pursue the activity to produce income for a livelihood, and the amount of time you devote to the activity. Clear as mud, right? So if the nature of your trading activities doesn't qualify as a business, you are considered an investor and not a trader. So many guys tell me like, hey, I want to claim trader status. I'm a trader. But if you don't meet the criteria, then you're an investor. You could trade all you want, but if you don't meet the criteria, you are an investor. So a taxpayer may be a trader in some securities and may hold other securities for investment. The special rules for traders don't apply to those securities held for investment. I'll use myself as an example. So I have a trading entity where most of my accounts are in, but I also have an account that I trade long term. So most of the stuff I'm looking at holding longer than 12 months. And what I'll do is I'll short against it, or covered calls, or I'll buy puts and things like that. But I don't ever plan on releasing those stocks. So I keep those things outside of my trading entity. So a trader must keep detailed records to distinguish the securities held for investment from the securities in the trading business. Like I just said above, the securities held for investment must be easily identifiable. So traders, again, you'll report your business expenses on Schedule C if you're a sole proprietorship, so you traded within your name. And then if you have a 1065 or an 1120, which is going to be a partnership, an S corporation, or a C corporation, all of those will be reported on the business return. And based on that activity, the business return will issue a K1, which ultimately flows through your personal tax return. So commissions and other costs of acquiring or disposing of securities aren't deductible, but they are included in the figure or to configure your gain and loss upon disposition of those. So when you're buying and selling, all that is included in the cost basis. So gains and losses from selling securities from being a trader are not subject to self-employment tax, where if you're a business owner, you know that self-employment tax is 15.3% because you're not only the employee, but you're also the employer. All right, so I'm a visual guy. So what I want to do is I want to just show, a comparison of what you get as a trader on the right, and the middle column, what you get as an investor. Wash sale rules. Investors, yes, you are subject to those. Traders, you're not. Investment interest expense, investment expenses, stock locate fees, all that stuff you can't deduct as an investor, but you can as a trader. I already talked about where you record them. Can you make the mark-to-market election? No, you can't as an investor. You can't deduct your home office expenses. You can't deduct your education expenses. You got these fancy computer trading station. You got 8, 10 monitors. All that stuff can be either depreciated, or depending on how much it costs, we can expense the entire thing the year of purchase. And then in terms of net operating loss carrybacks, as an investor, you can't carry them back. And actually, you can't carry them back as a trader either, but you can carry them forward indefinitely. All right, trader status. So this is essentially our come to Jesus moment. So we understand how we're taxed based on the activity that we do behind our computers. It's ordinary income, it's capital income, it's capital loss, ordinary loss. We understand what the IRS says about what an investor is and what a trader is. Now we need to figure out, okay, how do we qualify for it? Well, if you qualify, you get business expense treatment, and you have the ability to elect mark-to-market accounting. So how do you qualify? So there is not a bright line test. Like, this isn't college. You're not filling out an application. You're not sending it to a board for review. This is all based on facts and circumstances, and it's based on previous case law. So our firm sees a lot of trading data, and what we do is we baseline that against previous IRS tax court cases. So there are a lot of traders that have been tried in front of the IRS. And so what we do is we take them through this criteria, which we call behave. And so, Don mentioned earlier that I'm in the military. I'm an officer in the military, and a lot of the ways that we understand our operational orders, a lot of our, troop leading procedures are all based on acronyms. And so our firm puts every trader through what's called the behave test. And so I'm not going to go in extreme detail, but what I am going to say is that we like to see traders behave, which is we like to see business expenses that are ordinary and customary. We like to see equipment used in your trading business. We like to see a lot of hours spent in the market. We look at average holding periods of the securities that you're trading. We look at the volume of trades. So when your 1099B comes from your brokerage, we like to see gross proceeds in the millions, just because you're flipping. You're not holding this stuff. And then the extent of your activity has to be substantial. So you can't just trade 1 month out of the year and take 11 months off and think that you're going to qualify for trader status. IRS is expecting you to treat this like a full-time job. So most importantly, you must possess the motive to run a business and make a living. And if you have additional income sources, the best way to prove your legitimacy is through the establishment of a trading entity. So at the beginning of our call, me and Don discussed our firm provides a comprehensive solution that allows you as the trader to essentially, create an entity, and we'll run to make sure that there's no, any complexities with your home state. We typically like to see it in their home state, but we'll run it to make sure that there's no, tax implications. And then our in-house attorney will run everything else in terms of, creating the legal documentation with the state, and then, federal tax IDs, all those things. So that way you're locked and loaded when it comes to, creating that entity. But most importantly, I don't recommend, doing this alone. I recommend that you consult a professional. We would love to serve you. But if not, you're using your local accountant or CPA, just make sure they understand what it means to be a trader. So now that you are eligible for trader status, what we did is we compiled a list of some of the top tax deductions that we're seeing across a lot of our clients. So chat room or trading subscription, that's huge. Let's just say you're a part of something like, I don't know, My Investment Club or My Investing Club. I know there's a couple others out there. So if you pay for mentorship services, if you are a part of these educational services, a lot of these expenses are fully tax deductible. We touched on stock locate fees and margin interest. Everyone needs a level 2 feed with their brokerage firm. So the cost that you spend on your data feeds, if you pay for the software you use, if you're using, let's just say like DOS Trader Pro, a lot of that stuff, all that cost needs to be tracked and you can deduct it. Trading books and education, all of that stuff is, tax deductible. Cell phone and internet usage, live seminars. Matter of fact, there was a conference in Orlando, and actually that's where me and Don actually met at a live seminar. So that's the cost of doing business. Make sure you track all that stuff because you can deduct that on your taxes. Wages paid to family members. Again, probably consult with us before doing that, but you can pay family members a base salary if they materially participate in your trading business. You get the home office deduction, and you can also deduct computer and trading equipment. Now, I know a lot of traders also use rented workspace, so like our co-ops, where if you actually have a place where you physically go to trade and you've got a mock trading floor set up, whatever you're paying in rent, utilities, all that good stuff, all that can be deducted. All right, mark-to-market accounting. What I am going to say is it is important to make it timely and correct. There is a famous IRS tax case where it's Pope versus the IRS commissioner. And what happened was he claimed $1 million ordinary loss on his tax return, and the IRS challenged his mark-to-market election. And essentially what happened was he missed two pieces. One, it was not timely. And because it was not timely and he could not prove that, the IRS reclassified his trading losses from ordinary to capital. So what that means is that $1 million loss that he had sitting on his return actually was converted to capital. And so now he can only write off 3,000 instead of 1 million. Well, guess what? Now he has to carry forward $997,000 and hope to use it up in either a profitable year, or he'll keep rolling that, I don't know, for 60, 70 years. So when you make the election, what's important is that it's timely. So if you already trade in an entity now, it needs to be attached with your 2019 tax return. So if in 2018 you're trading either as a sole prop or as an LLC, it needs to be included in your 2019 tax filing to claim mark-to-market for fiscal year 2019. It's already too late to make the election for 2018. Now, if let's just say you decide to open an entity after that April 15th deadline, then you can make an internal election, which we can assist with. We like to make sure that the taxpayer clearly documents the election to use mark-to-market accounting. So again, the biggest advantage, losses are fully deductible and you're not stuck with wash sales. So I just touched on the advantages, and the biggest advantage converts capital gain and losses to ordinary income gains and losses. If you have a bad year, trading capital is precious, and so if you can maximize bad years in the form of either a refund or just minimizing your tax liability, you're still in the game. Like you're not out of it. So the disadvantages: there's no capital loss carryover, especially if you're carrying a huge loss. And the election is permanent. So once you make that election, you have to continue to use the mark-to-market method for all future years. So the only way to get out of it is you have to, dissolve the entity and redo it again, or that's basically it. All right, key deadlines. So 9/17, we talked about paying estimated taxes briefly, but essentially, trading is one of those professions where it's hard to know how you're going to finish the year. So we always like to say maybe in the first 3 quarters, if you're profitable, just give what you can. Like if you made 300,000 in 2017, but right now in 2018 you're only on pace to make 150 or 200, then it doesn't make sense to pay your tax liability all the way, because you could have a bad loss in Q4 and now you paid all these taxes when you really didn't. You may not owe them. So we like to see the biggest tax payment coming Q4, which is actually due January 31st, I believe. I'm sorry, January 15th. So October 16th, if you're an extended filer, your due date is coming up. That's just to file their return. The tax liability is still due on the tax date, which was this year, I believe, was the 18th. On the 31st, I'm sorry, December 31st, that's the last day to make any tax moves for 2018 tax year. So if you're an S corporation, you need to run your Q4 payroll events. If you're going to take advantage of the health insurance deduction or contribute to a retirement account, all that needs to be done before year end. And also a lot of our clients, some of them like to prepay their tax compliance preparation fees. And so what they'll do is they'll actually pay it in December, so that way they can take advantage of that deduction before year end. And the other 2 dates, February 28th, that's the deadline for all brokerages to send their 1099-B. So you can either download those online or they should mail them to you as well. And so that's kind of the key piece of information that we use if we're actually doing all of your trade accounting. And then the other 2 deadlines, March 15th and April 15th. So those are the standard deadlines. If you're not on extension, if you're on extension, again, those will go out till October the 15th. So key takeaways. Trading is hard enough by itself to be successful. Like, you need a strategy, like, to be successful. And why give it all back for the lack of tax planning? So I think strategy goes hand in hand. You need to have a strategy when it comes to trading, and you need to have a strategy when it comes to paying taxes. The other thing is, so many people are misinformed when it comes to the advantages of trader status. The two biggest benefits: you get business expense treatment, and you have the ability to elect mark-to-market accounting. You're a trader, you're not a CPA, you're not a tax guy. So I always recommend, don't go at it alone. Like, if you need help, raise your hand. You go to a doctor when you're sick, you go to an attorney when you need legal advice. Well, when you need tax advice, see a CPA. So again, if you need to reach out to us, you can send me an email directly at info@tradertaxcpa.com, and you can visit our website. So we have a lot of content out there. So like, if there's basic questions that we've already addressed, you can go to our website and actually kind of visit some of that content. And actually, I'm going to give you guys a preview. So tradertaxcpa.com. And so what we did is, a lot of the common questions, what we're doing is we're compiling them and publishing that content. And so if you filter by category, if you got questions about what trader status is, or the tax treatment of some of the stuff that I'm doing, if you have entity questions, if you trade crypto, if you trade futures, whatever, like, we're compiling a list of common information that the average trader can interpret and digest. And so what else? So if you want to book a consultation, it's pretty easy. All you need to do is go to schedule consultation. And what happens is, if you're a brand new client, we always recommend to schedule a consultation, just to make sure that we are a good fit, and that we can service your needs, because we don't want to start a relationship on a bad foot. So you just pick initial 30-minute consultation with a CPA, either be myself or someone else at our firm. And then we also do trader tax status evaluations. And then you'll just pick who you want. If you want to talk to me or the attorney. And then, as long as it fits with our schedules, then we'll book it. And the other thing is, we list all the services that we provide. So we are a full service CPA firm, but we focus specifically on the trader. So if you have questions, I believe there will be some time for questions. So feel free to ask. And if we can't get to it, just shoot me an email and I'll be sure to get back to you. I'm going to stick around for about another 30, 45 minutes. So I'm going to pass it back to Don. Thank you for your time.
Brian, that was phenomenal. I mean, truly great. One of the things that I really like about what it is that you guys are doing is the fact that you are able to help a person who's coming in and wants to go after that trader status, feels like they have been doing everything that is involved in being in the trader status for a while. You're able to go in there and help them reclass. Traders, I mean, listen, taxes, it's kind of funny because they are a necessary part of society. I mean, the roads that we drive on, the police and firemen that protect us, these things cost money, right? So I get it, but it's also important to notice that you really should focus on paying your fair share. Fair, I think, is the right word to use. Listen, I think that's all the time that we have for today. I wanted to thank Brian, our panelist today, for just a fantastic job. And if you guys have any questions or concerns, again, you can reach out to Brian directly. You can also reach out to me directly. D Hensley, that's DHEN as in Nancy, S as in Sam, LEY at stockusa.com. Shoot me an email. I'll get back to you as soon as I can. And I just wanted to, again, thank Sean McLaughlin from Trade Ideas. Seeing him yesterday was really great. And also a shout out to Patrick Whelan, who decided to tweet out today's webinar through his personal Twitter. So Patrick and Sean, Big shout out to you guys. Thanks for all the help you give us. And everybody out there that's trading, guys, thanks again. Look forward to hearing from you soon.